let me actually take a question with both of you, a question each. What is it that the market currently seems to be discounting, which is unfairly getting discounted by the market? What's the one or two key pieces which you're going to look back and say, this was just extremely obvious, and this is getting discounted currently? Ridham, first you.
It's a really hard question. So I think the conundrum that we are facing is that there is a view developing out there that AI is likely to reduce India's terminal growth rate. And equities is all about terminal. It's not about what growth comes in the next 4 quarters or 8 quarters. And indeed, if India's terminal growth rate has declined because of AI, then I think what is happening in the market right now is absolutely correct. So the contrast to that is that if India's terminal growth rate has not declined, then we are at one of the biggest buying moments of my life in the market. So I don't know if I answered your question, but that's the thing. Now, by the way, the answer to this is still not known.
You've inverted it, Ridham.
It will only unfold in the times to come. I can lay down paths which will cause AI to hurt India meaningfully, and I can also lay down a path where actually India is one of the biggest beneficiaries of AI. So depending on what happens, it's part dependent. I think if you ask me for my view, I'm in the second camp. So I think this is one of the most brilliant moments to buy stocks.
Gautam?
So I'll add to what Ridham said. The AI part, I agree, and that's a debate which will play out over the years. But linked to that is also currency. Like if we talk to investors, suddenly after so many years, many investors have awakened that currency is a weak point for India. But is it a weak point for next 3 months, 6 months, or for next 3 to 5 years? So that's the other aspect I would think is mispriced.
But currency is something which has been there every year, right? Means you see at least 3 to 4% depreciation every year. Suddenly, it becomes the talking point for foreign investors as far as investment is concerned. Why is that, Ridham?
No. This is not normal. The real effective exchange rate right now is suggesting that the rupee is about 11% undervalued. In my career, it has been this undervalued only on 2 previous occasions. So it got undervalued like this in the 2008 global financial crisis, and it got undervalued actually a little bit more than this in 2013 during Fed taper tantrum. Right now, there's nothing like that happening on the planet. So this is absolutely unique in India's history for the currency to become this undervalued in what is, I would term as a pretty normal macro environment. Arguably, India's macro stability is the best it has been in 35 years, and yet the currency is so undervalued. So no, you're wrong. This is quite a unique situation which I have not experienced in my entire career. I think it's hugely favorable to equity market investors because an undervalued currency, and it's a point that I make very often. First Japan, then Korea, then China and Vietnam. How did they gain so much of terms of trade? It came from keeping their currency undervalued. So the undervalued currency drives transfer of terms of trade. So if you ask me, I think the next 12 months growth in India will shock you to the upside. This is not a normal thing. It's going to be actually a very powerful environment. Of course, there are risks, and we've been dealing with those risks over the last few months. There was a risk regarding the trade deal. There's a more recent risk on the Middle East conflict. But if these risks go past, the macro situation is very powerful for earnings.
But Ridham, at a time when there's an engineered slowdown of sorts because of crude, right? To a certain extent, there's an
in which part of the world?
It's not reflecting yet.
But America's economy is red hot. Inflation is red hot. Korea is red hot. India is red hot. In month of May, we had record sales in vehicles. We had record footfalls in retail. We had record power consumption. Where is the slowdown? I am not seeing any slowdown anywhere. Seriously, मुझे बताओ कौन से slowdown की बात कर रहे हो आप?
No, I mean, the assumption is if crude stays...
The thing is, so the thing
assumption is if crude stays at 90 to 100.
If oil stays at 100, then we will slow down. But oil is not staying at 100.
Gautam,
But even between 80 and 90, we'll be able to absorb this?
See,
in terms of the growth that you're suggesting.
So one of the biggest achievements by India over the last 10 years has been a dramatic decline in the intensity of oil to GDP. So people are still stuck in the template of the preceding 20 years. They think oil matters. Oil does not matter. We import 1.7 billion barrels of oil net. $10 से बढ़ता है, तो it is $17 billion. That's about 35 basis points of GDP. It will knock growth down by about 9 basis points. $20 average, 18 basis points. You will not be able to even see it. Some concomitant impact on inflation, which is not a bad thing because we were running too low on inflation. So oil is different. In 2008, sorry, just excuse me for a moment. In 2008, when oil went to $148 in the month of July, do you know what was the annualized oil import bill of India? 14% of GDP. 14%. अब तो 4 पे भी नहीं पहुंच रहा है. So no, the oil equation is very different. Of course, we should worry about everything, but it is not going to create a problem for India's growth.
Gautam, if the macro situation is not bad as Ridham is saying, and with the data he's saying, then what's preventing foreign investors from investing in India?
So look, I would agree with Ridham on the macro part, by the way. Like, I think, look, even the most bearish person out there, and I'm not as bullish as Ridham is for the near term, but the most bearish person, I have not heard even one of them mention the word fragile, which is a very common term for India in 2013. So that's the context. Look, foreign investors, it's always many things. First of all, till a few months back, emerging markets were not the flavor. Today, all the money is going to tech, US, obviously. Look, a market like Korea has seen record selling by foreigners this year. Much, much more than selling in India. Double of that in India. Record selling. So look, foreign selling is one aspect. Now, from an India context, there are various narratives, anti-AI trade, valuations, growth. To me, it's simple. If growth recovers the way we are talking about it, it starts showing up in earnings, that will get the belief back. It's as simple as that. The positioning is now actually supportive. Unlike a year, 2 years back, the foreigners are not well positioned in India. So as soon as the growth starts printing, they will come back. But in the immediate term, 3-6 months, the global tech is still sucking in a lot of the foreign flows. That's the reality.
If you allow me, I'll just contribute to this. See, first quarter of this calendar, March ended, India did about 12% earnings growth, which was double of the previous quarter. So we doubled our earnings growth trajectory. It was very good compared to what we've been doing over the last 6-7 quarters. US did 27%. Japan, bada thakela market hai, 33%. Taiwan, 45%. Korea, 170%. You look at consensus growth for all these markets, for which I give you, for the next 1 year. India, I mean, if I give you 5 stocks, and by the way, Korea trades at 7-8 times earnings, Taiwan in low double digit, and even the US trades at 20 times earnings. I gave you all these multiples and growth. Which stock will you buy? I mean, India will not feature in this list. The relative earnings growth picture is very poor for India. Because all these other markets, and the previous panel spoke about this, we are in a major capex boom. And India piche se aa raha hai. So, if you ask me, take a 3-4 year view. Because some of this will unwind. In fact, most of it will unwind. India will still have growth. So I did this calculation on all these markets on 2030 earnings. And I know people in this room will say 2030. But equities are a quintessential long duration asset class. If you're not here for 5 years, you should do fixed income. You should not do equities. India is the cheapest stock market in the world. By some distance, because Korean earnings would have sank by then. And Korea will look really expensive on 2030 earnings. Today it doesn't. Taiwan also, US also, not India.
आप बोल रहे हैं 5 साल पहले का आगे का देखो वहां पर अर्निंग्स कम इंडिया की अर्निंग्स बेटर रहेंगी. That's what you're saying?
No. India's growth will sustain much longer than these countries. So on a near-term basis, as Gautam pointed out, we are paling in front of these markets for the growth that we are delivering. The absolute number is good, but the relative number is not. But that relative number becomes better and better for India as you go forward in time.
So then for the next year or two, Gautam, will Indian markets continue to remain a difficult place to be?
So look, from a market, again, there's a headline index level market and there's a broader market. Headline index market, I think 6 months, 12 months will still be range bound. I don't think there's material downside. We have seen Nifty, for example, bottoming out at 22,000 2-3 times already. To me, that's the clear bottom. But from a near-term trading perspective, it's still going to be range bound. Look, within the broader market, we've had bull markets even now. As we speak, the pockets where we are seeing bull markets. India is a bottom-up stock pickers market. So that will continue. I don't see that changing. For the market to really broaden out where Nifty breaks out of the range, and that's the definition of a bull market, to me, that's 6 to 12 months away. And part of the reason is not just the global foreign selling. To me, that's just a narrative rather than a big driver of markets in itself. Also locally, there's a huge pipeline of capital raising. So purely from a technical perspective, that's also going to be a drag on capital going to the markets. But beyond everything else, to me, it's a growth print. The day growth comes back to 15-20%, markets will fly.
And Ridham, what's your take on this?
We will surprise to the upside.
Next 12 months?
Yeah. Major, see, I think Utpal spoke about this. There's a major capex cycle underway in India. We see the investment rate going all the way up to 37.5%. If it goes to 37.5% as I'm seeing it, corporate profit share in GDP will be in line. It's 5.5% today. Earnings growth will surprise big time to the upside. Kisi ke forecast mein ye hai hi nahi. And the markets will do very well in my view. Headline, broad, everything. So I don't worry about it. With regards to foreign portfolio selling, if the IPO cycle starts tomorrow, which is going to start next week, major buying will happen. Because they'll come to buy the primary issuances. So your FPI selling issue also will get resolved. See, it's a technical point. Every morning, domestic mutual funds and retail investors are standing at 9:15 with a bid. 100 million, 200 million, 300 million. Kisi ko to bechna padega. So foreigners are selling. When corporates come to give their equity, foreigners will stop selling. The relative growth narrative will still be against India, but foreigners will stop selling. So there is a technical point to this. We need IPOs. IPOs aayenge, foreigners will buy, markets will go up. Growth, I think, is going to looking really good. And the most important thing which I tell a lot of global investors is that India is chaotic. And growth only comes out of chaos. There is so much to fix. Like the announcement on Friday, which the market did not pay much attention to. But what we did in the bond market is seminal. I've been talking about this for 3 years, 4 years now. And this is going to create a massive inflow of capital into India in the next 12 months. The number runs into tens of billions of dollars. So your BOP problem is resolved with the action. One small action on Friday. Like this.
We're talking about the tax ordinance on FIs into bonds, government bonds.
Yeah, and also the FCNR and, complemented with the ECB relaxation, all that. But the main thing was the bond thing. So little one announcement. Like that, we have 1,000 announcements in our back pocket to release. So if we want, we can just roll out these announcements and suddenly the sentiment will turn. So I wouldn't wait for that.
Should we?
Sorry?
Should we?
What?
Should we roll out all of those announcements?
They'll come. We have so much low-hanging fruit in this country because we have so much to fix that it is very easy to turn this thing around. So I'm not worried about this. I think if you're here for the medium term, there's a lot of money to be made. And the markets look reasonably valued with a lot of growth potential. So it shouldn't be a problem.
Gautam, Ridham says that no one is factoring in the kind of growth that's going to come in. Why do you think the street is not factoring that growth? Because it's there to see.
So look, markets always do look backwards. we say markets are forward-looking, but the near-term sentiment is influenced by what's happened last 6 months, 12 months. Okay? And the reality of high oil prices is a sentiment overhang, not to mention the currency part. Those are the things which are an overhang right now. And that's why I think next 6 to 12 months to me is still tricky and likely range-bound. But completely agree with Ridham if I'm taking a view beyond 1 year. Like the growth, it will come back. In fact, we had early signals of growth cycle, not just growth print, but a growth cycle coming in late last year, early this year. In fact, some pockets are still seeing that growth continue, including credit. But obviously that's been overwhelmed by the sentiment around Middle East, oil and currency. Now that's a question of time and also question of how long this overhang continues because it has to be cleaned out. Like $100 oil, there is some stress. It's not a big balance sheet or floor issue for India now anymore, but there will be some stress because of that. That will take some cleaning out. But if oil goes to 150 for 3 months, 6 months, then we are talking of a different environment altogether. So at the margin, markets are still worried about what's happening in the Middle East at the margin. And that's also capping the near-term worry in markets.
So Ridham is not too worried about oil, but where would you be worried if oil were to go? 90, 100, you'd be okay with it?
Look, oil was around 70, 80 before Middle East happened. And no one talked about oil, right? So moving from 80, and Ridham made a good point about oil intensity has come down dramatically for India, which is still missed. And all of this again goes back to the point I mentioned. The most bearish person has not used the word fragile. That tells you a lot. So oil will be a worry only if it goes up 130, 150. That's when it's a worry. Again, and also for a period of time, not for 10 days or 15 days.
Can I just say something here? See, you tend to desire to simplify this oil. But it is not like that. What happens is there's a compounding effect of negative factors. So it starts with the fact that India's growth slowed down. Then India went into a situation where the US trade deal started mattering. On its own, the US trade deal was not a problem. We have $45 billion of net exports to America because a lot of things were anyway exempted. The ones that were subjected to the 50% tariff was only $45 billion. On its own, it will not matter, but there is a compounding effect. Then came the Middle East conflict. So these are layers and layers of negative news which then actually add up and make it a problem. So when I was answering your oil question, it was as a standalone factor. But when you combine with the other things that are underway, then suddenly it all becomes a bit of a challenge. So that is, I think, what you need to keep in mind.
Ridham, whenever a geopolitical shock comes in, we start comparing ourselves what happened in the last 2 decades or 3 decades. Do you think from a structural point of view, Indian economy has changed to manage this kind of geopolitical risk and the shocks?
Yeah, I already mentioned, so the sensitivity to oil is a lot lower than it was in the past.
Not just oil, but across, whether it's tariff or any other event that comes in.
No, so see, this is all a function of whether they happen together or they happen on an isolated basis. So none of these things matter on an isolated basis, but when they come together, they will hurt.
The other piece is whether the growth on the top line, which is the growth that comes through, actually comes through even on earnings or not. And last couple of years have disappointed. You said Q1, calendar year 2026, the earnings were extremely strong. Is that really the kicker in terms of the quarter? I mean, is Q1 CY26 the turning quarter, and will growth really sustain all through FY27 according to you?
See, if you go back in time, say 35 years, Indian companies have a phenomenal track record of converting revenue growth into earnings growth, much better than almost any other place on the planet. The problem with the previous 6 quarters was that there was no revenue growth. I think Hiren made that point about nominal growth being single digits. We need double-digit nominal growth, which will then drive double-digit revenue growth and drive double-digit earnings growth. So we're getting there. We have gone through a period of lowflation, which caused nominal growth to suffer, and we are exiting that period now.
And low risk that this won't happen. Low risk that this won't happen. It'll very likely happen according to you. The double-digit earning growth FY27 likely will get clocked.
Listen, I go wrong half the time, so you got to take everything with a pinch of salt. Okay, I'm not some crystal ball gazer who can see everything coming. This is all about risk reward.
Of course.
So I just think at ये भाव से
But
it
high
looks
probability.
okay.
High probability.
हाँ, हम लोग सब भाव के खिलाड़ी हैं. Okay, भाव से काम करने का, भाव अच्छा लग रहा है लेने का. Abhi what happens in the future we'll find out, but I don't think you can go wrong at the current prices. The opposite is the case when prices are too rich. Growth looks very good, but you'll go wrong because, a small bit of bad news can cause returns to dwindle, which is like what we were in September 24.
Gautam, from an earnings point of view, do you think we are, narrowing ourselves to only the large caps, how they are growing, and not looking at the broader picture or a bigger picture of mid caps and small caps? Because if you look from a broader picture, the growth is much more better in that particular cohort as compared to a larger cap.
Absolutely. And again, that's the point about the broad market and narrow market or the index level market. Look, the India's indices are weighted by financials, consumers and IT. That's not where, at least for the last few quarters and possibly for the next couple of quarters, where earnings growth are high teens. Now, there's a case for credit cycle picking up and financials delivering that, but the broader IT and consumer unlikely to go to high teens in a hurry. And that's why when we look at index level earnings, Nifty, etc., sometimes that's a drag both in absolute terms and relative to history and relative to other markets. But the broader markets, absolutely. And that's why we said that there are pockets of bull markets already where earnings growth are quite mouth-watering. Not just good, but mouth-watering.
Is there a large risk to earnings growth, FY27, FY28, Gautam? Growth, you seem to be largely in line with what Ridham seems to be saying, that growth is going to come through. But will that translate to earnings growth is really the question.
So the way I'll put it is FY27, the street printed earnings, there will be cuts because street has not cut yet. But markets and investors are already expecting that. While FY28, I think there will be upgrades on both sides.
From a macro point of view, Ridham, the mid cap space and the small cap space, which are growing at a much faster pace than the large caps, do you think, that space is now getting very attractive for foreign investors? Because even if you look at the MSCI index, the kind of coverage that small caps or mid caps used to get maybe 5 years ago, the number of index stocks in those have almost doubled there. So the search for alpha, the search for growth is something which the foreign investor will now look at those kind of mid caps and small caps rather than limiting themselves to large caps.
I can't make such sweeping statements because it all depends on mandates, depends on the size of capital you want to put to work, the wherewithal to do detailed research. So it's dependent on all these factors. There are a set of people who are able to do on the ground detailed research, have the patience to wait months to acquire stakes and can do small and mid caps. There are others, what I call tourist money, that wants to basically buy the momentum large cap names, quickly deploy capital and make their money and exit. So I don't think we can generalize. At a point in time, I think a few years ago, foreign investors owned 1,200 companies in India in varying sizes. So it's not like they are averse to going down the cap curve, but it's not a general thing that we can say about the average FPI, for example.
And because you spoke about the fact that if IPOs begin, you'll see FPI flows coming back in a big way. At that time, is it fair to say that you'll have a lot of primary FPI flows, but in the secondary market you'll still have profit booking from the foreign investors?
See, again, we didn't actually discuss this in greater detail. There is a plumbing issue. The plumbing issue is that India's weight in the index continues to fall because it continues to underperform. So back in September 24, we were nearly 22% of the EM index. We're now down to under 12. And the fact is that almost 50% of the money managed in the world is passive. So it just reflects index weights. So as your index weight falls, it has to sell. So today India underperforms, next day again it has to sell. Because they come to sell, it underperforms again. It's a vicious circle. We experienced the opposite of that in 24. Because the markets were doing extremely well, passive money had to keep buying. And that is why you get these extremes in markets these days. both to the upside and to the downside. So something breaks this and then the plumbing turns. So that is another aspect about the FPI selling, because Gautam made a very important point which I don't think you explored, which is that the Korean markets have seen double the amount of selling that India has seen year to date from foreigners, and yet the Korean markets are like this. So I am actually, at the end of the day, if you have traded stocks, you will know one simple thing. The net flow is zero every single day. So this massive discussion about flow and stock market returns is so misplaced. The only reason why FPI matters is because they influence my BOP. Not because they're going to change share prices. Share prices, Vijay Bhai is going to change. Okay, so when he comes in to bid, nobody can stand there and sell the stock enough to take away the power of his bid. What moves stocks is the force of the bid or the force of the offer. Not
But
who is
that being
buying
said,
and whether foreigners are buying or selling. It is not material. ज़्यादा discussion हो रहा है इस पे. हाँ, BOP पे बात करते हैं ना, but BOP तो turn मार रहा है अभी.
और इस साल पॉजिटिव रहेगा बीओपी बिकॉज एफसीएनआर भी आ रहा है और बॉन्ड फ्लोज भी आएंगे.
The likelihood is that we will have a positive BOP, and this quarter will bear evidence. It's going to come very soon, and we'll know in the next 30-35 days. But I think we're doing okay on BOP now.
Worst for the rupee is over. I'll ask each of you. Worst for the rupee is over. Gautam first.
I would think so. Absolutely.
Ridham.
So I think the rupee is set to appreciate violently.
वायलेंटली मतलब कितना.
That's the way it
He's not willing to put a
violently.
percentage to it, but
Violently appreciate.
नहीं अंडर वैल्यू भी बोला है और अप्रिशिएट वायलेंटली भी होगा, तो कितना जाएगा.
Undervalued है इसलिए तो appreciate होता है ना violently.
कितना तक जाएगा.
No, I'm not going to put it. I'm not going to put a number. I'm not a rupee expert.
गौतम.
No, like rupee is not just about rupee, right? It's also about what happens with dollar and all that. So,
okay, let's come to the moot point. So clearly, we're at the bottom end of the cycle. That seems to be the consensus on this podium for the moment. Last half hour. What is it that looks attractive from a risk-reward perspective, Ridham? What should an investor go out and buy right now? 1 year perspective.
I think Utpal said it. Financials, both large, mid, and small. I think it's the easy picking. You don't have to think much. Valuations are good. Growth is there.
That's an easy answer. That's an easy answer.
No. That is the easy picking. If you're not lazy and if you want to do a lot of work, then I think there are tons of mid and small cap stocks which trade at sub one-time sales, are actually very decent businesses. The businesses are in great shape, balance sheets are in great shape, just the valuations are, but there's a lot of work to be done then. Then you have to do a lot of mehnat. If you're willing to do that mehnat, there's a lot of money to be made in India.
Gautam.
so look, financials is obviously the easiest one, and not just because of valuation, but also because this cycle of growth recovery will be accompanied by a credit cycle, a proper credit cycle, which means even the private financials which have been struggling with headline growth will see much higher growth than what the markets are looking at. So it's not just a valuation argument. There should be actually high growth rates coming back. Look, beyond financials and mid-caps is a very, very broad word, but energy, and specifically the renewable energy piece and the entire ecosystem around that. Data center is a big thematic, but boils down to, again, energy and power T&D, where Indian companies can benefit. And finally, pockets of consumption. Like, I think that's one area where there's a lot of pessimism. Estimates are quite bearish. And where the right mix of growth and inflation, I think the building blocks are in place over the next quarter or two where they can surprise.
But
If I may add some subsectors because I didn't see that. So auto parts, retail, then I think industrial equipment, but not necessarily just energy, semiconductors. I think general industrial equipment, real estate, I think construction. These companies, I think, are set for very good months ahead.
You said real estate, which hasn't done well.
Yeah, it's going to turn now.
Okay. And Gautam, I'll just push you a little bit further with regard to sectors. So consumption, some of the valuations trade at 30, 40, 50 times multiples. they're holding companies in counterpart countries, Korea and the like. They trade at a fraction of that multiple, right? How do you justify that in an environment like this?
Look, you can't justify based on fundamentals, obviously, but that's the market structure, and that won't change.
I'll tell you, see, the reason why investors have flocked to India is because this country is obsessed with return on capital. जो बाहर ठेले वाला है ना, उसको 15% आज नहीं मिला ना, तो दुकान बंद कर देता है. Nowhere on the planet other than from United States of America is there so much obsession with return on capital. Stock returns only come from return on capital. They don't come from growth. If you grow without return on capital like China has done, you don't make money in the stock markets. You show me 20-year, 30-year compounded return in China. Nahi milega. China has done very well on GDP growth, but no focus on the balance sheet. Stock market returns are made from the balance sheet, not from P&L.
Point well taken.
Yeah.
The consensus right now seems to be financials, and my simple guess would be lenders. The eternal debate seems to be private versus PSU. Where do both of you all stack up on that?
I think the broader financial space which will do well. It's not the time to choose.
Okay.
I think this comparison is not valid. What you have to do is buy the lenders that are aggressive, willing to take risk, and are trading okay. Valuations, I think, are almost fine everywhere. So you want to look for people who are willing to take risk. Now is the time to take risk and lend. If you're not going to take risk, then I don't think it's worthwhile.
So faster growth. Faster growth.
Yeah. If you take risk, you will grow faster. But it's a good time of the cycle to take. It's a good time of the cycle to take risk.
Okay.
There will be a time when, of course, this will not be the case, but we are not there as yet.
Okay. Closing thoughts. Biggest risk that India faces, maybe over the next year and a half. What could surprise on the downside? We've covered pretty much all the upsides now. Let's try and.
Downside is the oil shock, not current oil.
So above 120, above 130.
At least above 100, yeah.
Okay. Ridham?
See, I worry a lot about where we are in the world. The overall global debt is elevated and the world is aging. We are masking the structural problem on the planet with a massive AI cycle, capex cycle. At any point in time, if that comes to the forefront, it will create a problem. Now, for a country like India that is seeking to increase its trade share in the world, both manufactured as well as services, such a global problem will hurt us. And it's not a question of next 1 year, 2 years. This can happen at any point in time, so it's my biggest worry.
All right. Everyone, please, if I can request you for an ovation. We've had a fantastic conversation. Ridham, who's synonymous with Morgan Stanley, and Gautam Chhaochharia of UBS. It's a complete pleasure hosting this. Thank you so much for being here.
Thank you.